The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, October the 2nd. My pleasure to be here Monday through Friday, 11 o'clock till noon. Not sure why I get that frog in the throat just as I'm about to start speaking. Yes, there was some bad news about the jobs, but look at this. The S&P and the Dow plummet. I'm showing you a chart of the 10 minutes. I actually sent this to the Tiger Den and to subscribers this morning saying we're on the cusp, we're on the cusp. We're actually at E in the one case and went to an F in the 10-minute E-mini chart. And look, 1, 2, 3 peak Fs and kaplop. Now, what's really interesting about what's going on at this particular point is that I showed a chart earlier this morning of General Motors to subscribers. I said, something's going on. This is acting very well. So we're going to do a whole bunch of things right now. Let me just first of all say, just a fabulous few hours we've had. Great hosts. Larry Pesavento did a wonderful job. Then Tom and Tommy and Daryl just talking natives, talking the market, talking strategy. That was really good. Maybe I need to have a little tea. All right, there we go. And what's important about what we've just seen, and I had a couple of questions about this, a couple of emails and IMs, and what I'd said is, for the past few weeks, but certainly the past couple of months, we've been getting extremes so that there's almost like you can guarantee that there's a 50 to 60% extra push to whatever side you're on. To whatever side the market is traveling. And because of it, there's this kind of a smoothing out, a regression to the mean. You could say, I don't want to be mathematical. Yeah, that's not my thing. But in fact, what we're looking at right now, you can see this is the halfway marker. I'll draw it in right here. But what I'd done, somewhere around here, and what I'd done is I'd shown on the same 10-minute E-mini chart that, look, you could do this, and actually this is a chart I've been showing for days now. You could do this is the complex chart, the one with moving averages, the 200 period, the 9 period, etc. And what it's showing is that there was a left side, right side time price match. No, it wasn't a match. It was way early underneath the support that was right there at on the 1st of October at 1890.25. And at 1890.25, 90.25, there was that fabulous rally to a peak F, pullback, and then I drew in a dash channel line, a trend line, and it went all the way up. Now, some of you might recall that yesterday at this time, I'm sure it was yesterday at this time, 6 o'clock, so that'll be right there. So yesterday, what we were looking at is a pullback that went to a left side, right side price time edge to the bottom. Now, what's really important about what we're looking at here, this is a 10-minute chart. Oh, it was the 120-minute chart. I had the dashed line. Let me show you the 120-minute charts right there. Remember, I had this dashed line, and I said we've gone to the left side, right side price time edge exactly, and then we went a little higher to a D, held that trend line, pulled back, and then splop, it went right through and hit the 200-period moving average at 929.50, pulls back, and today it went to a peak C and then a peak C minus because it never went above 1929.50. It went to 1928.50 just as the Fed, as the announcement on the jobs came out, or I should say no jobs came out. And then what happened is, kaplop, it comes down. So let's go back to our 10-minute chart. And what we're looking at here as a trading vehicle is, I'll lift it up a little bit. You'll see that just about 10 o'clock we made the low. These are unbelievable moves. I mean, if you look at it historically, look at this. This is nothing. You're just bouncing around, but it feels intense. It feels extreme. And if you're looking at the last, since mid-August, since the August the 24th low, historically, yeah, big swings, but we're really just here in this trading band. If you look at it on a monthly chart, well, let's go to the weekly because I haven't got the monthly of this just yet. Look at the weekly right there. Look on the weekly chart. Yes, it is a big move, and we're covering huge ground. But in fact, we're still in a trading range. That's really what the point I'm trying to make is that we're in the trading range, and here's the chart that tells the story. This is the chart right here that I show subscribers every day. And isn't it incredible? I'm talking about the 16,000, 16,000, 16,000, 16. It's like that 17,500. You remember, at a certain point, your eyes go glazed, and you say, well, what is this guy talking about? What could I do? I was looking at a level, 17,500. I said, if the Dow closes below that for maybe 2 out of 3 sessions, watch out because we could go straight down. What we did is we broke that 17,490, I think it was, level. Whoosh, went down to the next level of 17,034, broke that and went down even lower. But what's really important is that from the 15,370 level, I drew in the lowercase h because patterns repeat over and over and over. And there's the h that goes to an M with a possible larger M. That's that peak C at 16,933. This morning, it looked like we were going to take out the 16,000 was all over. And what happened? We went to 16,013. Held the 16,000 level. Why? As I said to subscribers this morning, rectangles can last a lot longer than your patience. Now, I had planned, we still might get it. I don't want to say I hope we don't get it. The trade is the trade. But we will be looking to the short side of the Dow if this rallies a lot more. But what I am looking at here, we're getting lower and lower highs, and we are making lower lows. And that says to me that the 16,465 high in the Dow of the 25th of September is key. A break above that says, you know, something's changed. Looking at the IBB up 4 at 309. This is a fascinating period. Now, I hope I can cover all those other things. I better write it down because I'm liable to forget. I spoke about GM, so we want to look at that. I want to look at the TLT. I want to look at gold. I want to look at dollar. And I want to look at the VIX. So let's go through the numbers. Dow's down 102 at 16,168. Remember the pattern I just drew in here with that arch formation? Well, now I'm charted out. I've got right there, I believe. Right there. Yeah, there. I drew the arch in earlier, and I put a plus sign to say I haven't got an up arrow as yet. I haven't yet got the power of the move to say I've got a buy signal to buy mode. This is definitely a buy signal, but I haven't got the buy mode to take the 10-minute chart to the buy mode, upgrade the signal, the buy signal to a buy mode, because that would suggest we're going to a leg D in the 10-minute E-mini chart. So let's go back to our story. Let's get rid of this. Now, the Dow is down 109 at 16,162. The S&P is down 11 at 1912. The comp index is down 17 at 4609. Not bad. Gold is up 24 at 1138. This is the response when the bonds went higher. Bonds are at 159.23, up 129. Crude oil is down again. It's at 44.24. High-grade copper is back at 2.29. So let's get going because we want to take all our questions. We've got people lined up. We've got Mark in Fort Collins. Mark, how can I help you?
Hey, Basil. How are you today?
I'm well, thank you.
Good. Hey, I'm a little confused on my wave counts on the GDX. I'm holding a long position from about the mid-13s, and it's having a great day today, but I'm trying to figure out how much more of this wave I should be riding. So give me a shout on that.
Okay, so this is what we're looking at. I'm just going to put in the chap wave notation as we speak. There we go. Okay. So first of all, let me move this away. The GDX, let me move that away. Oh, wait, let me just do this. This is the 120-minute chart A. B, C, D, and went to the E, to the 200-period moving average, and then it plopped down again. Okay, I'm ready for this. So the question is, the GDX, which is the market vectors gold minus ETF, trading at 14.14, up 0.73, up 5.4%. Another big move, but the big moves have gone nowhere. And the GDX weekly chart says, gosh, there's frog in the old throat, says there are a couple of things that better happen right now, because if they don't, then we're looking at having another sip of tea. Hold on. Very interesting. All right, we are back. So let me do this. I'm going to just first of all say that we've seen many of these moves to the upside that have failed at a peak A or a B minus. That's always a big negative in any chart pattern. And we've seen the GDX go from the 1301 level back on the 5th of August all the way to a leg B in the Chapman wave at 1616 on the 21st of August. Comes back down and makes a lower low. And this low at 1262, let me just type in 1262. This is the low that said, wait a minute, I'm a little different to the others, because all the technicals, let me draw vertical lines here just real quickly. A vertical line there, vertical line there. And that's saying the technicals now are way better. The MACD's way up here, the stochastic's way up here. So this should be a fabulous rally. So it goes to a leg A, which becomes a peak A at 1334 on the 14th. It goes all the way to the high of the 18th to 1471. And then it pulls back and makes a sideways trading range recovery. So here's what I'm looking at. This is the first time that there is the possibility that if the GDX takes out a left side high bar, that you can get more than a single leg up or two legs up to the upside. Why? Because if 1471 is taken out by, today's Friday, by Tuesday, it shouldn't be later than Tuesday. It has to be Tuesday, Wednesday morning, absolute latest. If it's taken out, then I reinstate the B minus goes to a B, and that becomes a C. And then you've got the chance to go towards the high that was made of 1616 on the 21st of August. This is what I'm thinking here, because there are a couple of things that are going on. And I can't just do the GDX without looking at gold, but I also can't do the GDX without looking at the weekly chart. So it's come back and it's gone down to an A, B, C, D. This is a trough. F right here, and now this is leg A. So you are in a position already.
Yeah, I'm in a call position that expires in a few weeks.
Oh, you're in the call position. That's, in fact, the call position is probably the best position you can be in. Can you hold on a second? I'll be able to do a little work during the break, because I think this is your best opportunity to see a really good rally if certain things happen. So hold on. Okay. We've got Mark in Fort Collins and Freeman. I know you sometimes can't hold on. Hold on.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back, and we are back with Mark and Fort Collins, and we're looking at the GDX, which is the Market Vectors Gold Miners ETF. I just wanted to quickly show in my in the Chapman Wave projections, the resistance in the 10-minute chart is at 1421. It's trading at 1420 right now. And what's really important about it is that in the high is 1423. In the 120-minute chart, it's broken the 1382 resistance, and 1434 to 1464 would be the upside target and resistance areas, and 1450 in the dailies. So, and 1331 was the support to 1283. So these levels have been met beautifully. So I'm going to go back here, and I'm going to say there are a couple of things that are going on. I want to see follow through in the gold. And I believe that this is the first time that there is at least an impetus for the gold rally to continue. And that's because the dollar has slipped. But if you look at the weekly, the dollar is just back in that rectangle trading range. So it hasn't broken down. So here's my recommendation, especially since you've got the calls. It gives you that kind of room that you need, because I believe that if the GDX pulls back in the next 2 days, if it holds above 1390 to 1370, and then starts another move to the upside, that's beginning to show that it's making higher highs and then lower and higher lows. That's what you need. So it's a little early for me to say. I'm looking at the weekly chart, and the MACD is just about to cross positive. The histogram's been improving. I've been looking at this the other day. I said, gold is not looking too bad. I don't see anything yet, but it's really not looking too bad. And I'm looking at the rising stochastic. So the ingredients are there for a rally. I'm not saying it's a huge rally, but the ingredients are there for a rally. I think you're in the right position. All I can say is that on the downside, it's not the upside. Let's look at your risk. Your risk is that if the GDX stalls and goes underneath 1350, you could be looking at time where you're usurping energy, upside energy, not going anywhere, but you really are not breaking down. That's your worst fear as an option player, that just you're going to see the premium shrink. So at this point, you got the premium back in. So you want to see that premium hold. By the end of the day, you want to see the GDX push into the 1423 or higher. You don't want to see it actually pull back under 14. I think that's what I can say now. By about Tuesday of next week, I'll have a really much better picture. But at this point, this is your best opportunity this is the GDX's best opportunity to rally. And if it can't do that, the weekly chart says it could be building a rectangle, not an oval, a tight consolidation area. And that's really going to be very important, because if it ever closes under $12, it's done for a long period. So this is an important time frame. And what I call this is a cluster formation in the weekly chart. If it doesn't break the bottom of the cluster pattern at the bottom, it builds like a spring-loaded upside move. It could quickly go to the 1650, 17 area if, in fact, it breaks into the 14. Well, it really needs to close nicely, strongly today and follow through on Monday and Tuesday. That'll be the first sign that the weekly chart is building momentum. Hope that helps you.
Yeah, it does. And if you have time before the end of your show, I know you've been looking at the IYR and the short side and the long side. I'm wondering what your thoughts are on that, because it's holding pretty well.
I will try to get to that. Actually, I'm not doing the very final segment, last 5 minutes. I have to leave. I've got to be away. So I'll try to do it beforehand. But it's a good point. I'll try to look at it. Thanks so much for calling, Mark. Have a great weekend.
Bye-bye.
Thank you. Let's go to Freeman in Dallas. Hi, Freeman.
Hey, Basil, how you doing, sir?
I'm thrilled that you were able this time to hold on. I know sometimes it's difficult for you. You'd like to look at?
Basil, what I did this morning, I put some limit orders for some futures contracts, the E-mini and the NASDAQ, and I got filled the S&P at an average for half of my position at 1888. I understand the rectangle you were saying on the morning call today, that it's just a rectangle, we're going up, and then as we hit the upper ranges, will come down. But my gut feeling says that was a successful test of the, I want to argue the point that it was a successful test of the August lows there, that we hit the August lows. We're going up from year into year end. What do you think? Okay.
So that's a really good point, and it takes me to a bunch of things. So first of all, at this particular point, you are long in the S&P, right?
Yeah, the E-mini, I got in the futures contract at the average of 1888.
Wow, 1888, and the low today was 1883, and right now it's trading at 1901. So that's fabulous. See, I like that, because you had a plan, you committed yourself to the plan, and I don't know when you did that trade, but in fact, that was just a perfect entry for risk reward. Now we can talk about some other things. We've got a break coming up, and Freeman, what I'm going to do is this. I'm going to give you projections on what I'm looking at. I'm going to try to answer your question about a low, maybe not the low, but at least a big tradable low in the market. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So here we go. Well, we've got Freeman Online. We were talking about the SPY, and I was trying to relate a bunch of things to what we're looking at. Now, this is going to be very interesting because the market is absolutely coming back from that sold condition. So that's very good. I need to go back to I wrote it in the wrong place. The VIX index. I looked at it a little earlier. Keep hitting the wrong chart. This chart here gives me the VIX index. Now look at this. In the VIX index, the monthly chart, the weekly chart has gone 1. Where's the 9 EMA? 1, 2, 3, 4, 5, 6. This would be the 7th week. If it doesn't close below 2190, this will be the 7th week that is held above the 9-period moving average, and the MACD is strong, but the stochastic is not that great. And this is saying to me that in these volatile moments, it isn't consistently over a period of time, but it has been consistently the last 2 weeks, that even on the big moves up, the volatility index is held quite steady. And that tells me that money is coming in to the safety of the security and the insurance of the volatility index, buying it as kind of leverage or buying it as a position. I think it's more buying it as a leverage against portfolios. At this point, I don't see the explosive move in the VIX that says it is not just buying, it is the trade is the VIX. At this point, it's not the trade, it is the position. Gee, I hope I'm making myself clear. One is playing the trend, and the other one is playing the insurance against the trend going against you so that you can at least have the positives of the VIX rallying. I think that's clear. Now, what's really important about this is that when I look at my chart pattern, look how today there was an absolute opportunity for the market to break that 16,000 level. I'm going to repeat it. That rectangle formation is a formidable thing. If you can recognize it, you can. I didn't have the courage this morning. I was going to do it, and then I just didn't have it, was to put a buy at 16,000 and say, hey, you know what? You go lower than that, much lower than that. I don't want any part of you. I'm wrong. But if you use that as the trampoline, you can bounce, and you can bounce back to the 9-period moving average of 16,000. Let's see what it is now. 16,248. And the market right now is only down 63. The S&P is down 7 after being way lower. I think you're in the right position. And what I'm going to say to you is I see no reason to think that this market can't bounce, and it can't bounce to 16,460 in the Dow, since you're doing the SPY. Let me give you the SPY numbers. And it couldn't bounce right here. The SPY has resistance at 193.25 at the 9-period moving average. And I'm suspecting there's another little arch formation. Now you're going to get the curve. You go from arches to curves, and you're back to to cups, and you're back to the cup formation. And that says, based on the chart that I'm looking at, gee, can I grab the 120-minute chart? Will I find it? There it is. That the SPY could rally to 193.80 to 194.50. I don't think it's going to get to the 196 200-period moving average in the 120-minute chart, but I do think it's A, B. I think you're going to get a C. There's a good chance you can get a C above 192.49. That's a long way to go. I don't want to get too carried away. I think there's enough evidence to say that the trading range will continue and that there will be a bounce. And all I would say to you is, you were the one that picked perfectly to the entry point. I'm going to also suggest that you'll be the one that will know whether you should get out or not. My levels on the SPY, and my levels on the SPY that I'd be watching is the support, not the upside, because the upside will take care of itself. It's the downside. And if by the end of the day there's a sudden sell-off, then that's going to be really important, because if the SPY closes under 190.70, somewhere around 190.70 by 4 o'clock today, that says not only are you in a trading range in the dailies, but the 120-minute chart is defined very well, 192.50 to 189, maybe 188.50 could be a trading range. So you want to see this continue into the rest of the day. You want to see that the where did I go? And now I'm charted out. Here we go. Let's go. That one. No, I'll find it. I was trying to get that 10-minute chart so I can tell you exactly on your futures. There you are. You've started leg C. So leg C says that this is a good chance to say that you're in a buy mode. It should take you to D. 1911 is the 200-period exponential moving average. And there'll be a failure pattern if the futures close underneath 1898 for more than 3 10-minute bars. That'll start to say that's a failure. So I think you're in absolutely the right position, but you're in the right position for a trade. I can tell by your voice, you think this has the potential to actually be a low that could be 6 weeks or more. I just don't see it. And I had a question that I'll answer now from a subscriber saying, how come everyone's been looking for a rally and you've been negative? And all I can say is that I am negative, but I'm beginning to see sectors that are breaking down. But it doesn't mean to say that you can't get something like the IBB, which has just been battered, having a really good a rally, because it's oversold. So I think the rotation is the thing that's going to keep the market buoyant in the rectangle formation, but the rotation's also the very thing that's going to stop the upside ability. So I think it's a great question. You've got a wonderful trade. I'm just suggesting that I would not get too carried away. I'd let it play out, and I'd raise my stop, and I'd make sure that under no condition must you take a loss. In other words, don't be so convinced that it's going up that you see your profit come back. If the S&P futures, don't be afraid to take your gains, but do not, you've got such a great trade, do not take a loss on the trade.
I'm raising the stops as we speak right now.
Okay. And as I say, that was just a great entry point. And when we're done, I'm going to look at something like a GM and IBB, and I'll answer some of the other questions I've got. Freeman, good luck with the trade. Have a great weekend, and thank you so much for calling.
Hey, thanks a lot, Baz. I appreciate you.
Thank you very much. So, folks, now we're looking at the SPY. But let me go to Ford. Ford's having a great day. It's up 14 cents, up 1% at 13.82. It's not a wonderful chart pattern, but it is showing that it has some internal strength. It's not ready to break down. Look at GM. I did this whole thing. I spent hours on studying the chart, discussing it, saying how good it is, and then I just didn't have the courage when everything plunged like this. I changed my. I always promise myself, don't change your call. You spend enough time. Don't change. Don't get emotional. But it just seemed to me that GM, it would be risky in this environment if the market remained low and the Dow actually cracked 16,000 this morning. To have GM, even though as a trade, it's a big deal. I would have put in a very tight stop, 2% on a small position. Now it's trading up 54, 31, 21. And this is very important. Why? Because look at the 120-minute chart. I drawn this and I'd shown subscribers. This is the pattern. The left side, this is embarrassing. This is like Larry this morning. I heard him saying he got into gold exactly right, within 10 cents of no, that was the position he was going to take. I don't know if he got in and he got out, but he didn't take the trade, and it was within 10 cents. And then he also just got, he overthought it. It's like playing tennis yesterday. I played tennis. I win the first set 6-0. I play someone who's even. We always alternate between winning and losing. And I'm saying to myself, uh-oh, this is not good. 6-0. I was playing well. He was not playing that well. And then all of a sudden, everything comes together for him. And I lose the next set, 0-6. We've never done that before. And I'm saying, hey, wait a minute. Something's wrong with this picture. But I actually felt totally comfortable. Why? Because I was actually playing as well as I did in the first set. It's just that he came on real strong and he got a couple of lucky breaks, but he was playing very well and he beat me. I felt comfortable. And that's the same thing here. The analysis was good. I just didn't get in, and it just gives you confidence in your techniques. You know, it's a big deal. You miss a trade, but it is upsetting. Why? Because if GM, you see, I've had this occur both in the XLF, the financials, and in the autos. There are periods historically where I've seen one of the sectors hold very well while the general market is tanking. And we've seen that, peak D, unforced errors. And we've seen that happen in the autos as well. Every once in a while, you'll get, no, I'm talking decades, you'll see the auto is holding very well when the general market is not well. And then I thought, well, wait a minute, if the jobs report comes out and is not good, who the heck's going to be buying General Motors cars? So I overthought the thing, but the technique was right there. I drew it in left side. Let me show you here for those of you. Embarrassing. Left side, right side. Look, that's red. I didn't want to make it red look too messy. And it comes down. I chose this peak right here, peak A, that failed, peak A minus, as the midpoint, because I keep getting questions about where's the plumb line that you use for your left side, right side. Well, if it's moved lower than an obvious plumb line, you first go to the obvious plumb line, and then you go to the lowest low, which would have been right there. But I knew that wouldn't work because of the strength of GM, so I went to the next one. And then the inside wedge, this is the most important thing. How do you work out where the inside wedge is? Well, there it is, and we hit it to the hour, to the 120-minute hour. Look at that. This was the target. That was the hit. So that was first. The next one is up at 31.81. I'll draw that in later. But what's important about this is that under these conditions, General Motors is showing some strength. That's why I do not want to dismiss when the question came up with Mark about the GDX, the gold miners. Why? Because if you're looking at, so General Motors, I just wanted to show it's acting well, and sometimes trade what you see is really what you have to do. And forgive me, I am a subscriber. We probably would have got it because I wanted to buy it underneath the low of the close yesterday of 30.67. Hey, that's the way it goes. So now let's look at this. You've got, I want you to go, I wrote it down, General Motors. The TLT was a question. Let me just quickly do that. This is spiked to a leg G/C in the 120-minute chart. Now, this is going to be very interesting. Is this just like a one-day blow-off to the upside at 26.21, the high today? I don't think so. The weekly chart is suggesting that there will be a leg C, and I showed this in the den the other day. I can't remember if Yo would just tell me what it was. IEF was it that we were looking at? IEF, I said that should go to a higher high. That was a few days ago. Yep, I typed in. It should work its way to the 109s. Well, what was the high today? 108.97. Gee, it missed it by 47 cents in the left side, right side price time match, and that's good. But it has gone to a higher high, and that higher high is E. And it's gone to the D. That's what we were looking at. I said it should go to, so that's interesting. So now that's in D, already. So you've got a D in the iShares 7 to 10-year Treasury bond ETF. This is interesting, isn't it? And that's a weekly chart, not all-time high, but a weekly chart. And it's gone to an E, unless it's recycled. I'm calling it an E for now, in the daily. So, okay, we're going to be watching bonds real closely because they're acting very well. But, sometimes they could sell off without news from the Fed. So this is very interesting. So far, the MACD is very strong in the daily. Stochastics at 94%. This is the IEF. Let me go to the TLT since that's what most people look at. The stochastic is at very strong. The stochastic is at 90%. But it's the weekly chart that is lagging. Now, that's really interesting. The weekly chart has not made its leg C above 128.92, and that's going to be telling me a lot of information. So I'm going to do this now. Let me do this for fun. So here's this chart that we were looking at, the TLT. Let's go to TLT. Oh, let me do this because, we're almost close to wrapping up, and I'm going to be leaving early today. So I'm going to skip all this stuff. I'm going to give you all the parameters that I'd like to look for. The VIX index. The VIX index is trading right now at 2288. If the VIX closes under 22 at 4 o'clock today, it's still okay because the 9-period moving average of the weekly chart is at 20.53. If it closes under 2053, because suddenly the Dow is up 80 instead of being down 80, and the general market is high and the S&P is high, then that's a change in trend. And that says, yes, now we can go to the upper band of this rectangle formation. So that's the VIX index. If the VIX index holds and actually closes towards the high of, let's call it 21. What is the high today? I don't think it can do the 24.47. No. If it goes anywhere above 23.10, that's going to suggest that that weekly chart is still showing buying pressure of insurance, and that's important. Now, of course, the IEF is the short-term bond and is performing way better. This is going to, I haven't got time to show the triple yield chart. I'll show subscribers over the weekend. So we're about to wrap up. We've got great shows coming up all afternoon. Check out my opening call. You might find it very interesting. And thank you for being here. Have a wonderful weekend. And I am leaving early. So Nico and Paige coming up after the music and after the break for their hour. So thank you. Have a great day.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.